Hey everyone, this is John Feneck with the Feneck Commodities Report, and with me today is my YouTube partner, Don Durrett, founder of goldstockdata.com and author of an awesome book that we should probably mention. Don, we haven't mentioned your book in probably 3 or 4 months. And with gold and silver just cranking here, a lot of people own the metals, but they don't own equity exposure. And your book is specifically about gold and silver stocks, correct?
Yeah, well, thank you. It's the only book that really explains how to understand the risk reward of the various gold, silver mining categories, exploration, development, producers. So I have, like it's like a textbook. It's very dense. I mean, there's a lot of information in it. It's very useful. So anybody that owns any gold, silver miners or wants to buy any, definitely recommend it. So it's on Amazon. Just go to Amazon by my name and look for the black. It's gold and silver on, and so it's a black cover.
Okay, great. Well, Don, there's a lot to discuss here. We're only going to spend, 13 to 15 minutes, I guess, today on macro, and then we're going to introduce Kimberly Ann, the CEO of Lahontan Gold. The ticker on that to start off with is LGCXF in the US. I know, Don, you've been a big fan of hers for many months, and I'm glad we're getting to interview her later today.
Yeah, it's a good story to get out there.
Great. So on the macro side, since we last talked, the obvious 800-pound gorilla in the room is Trump and Iran. And I know you and I feel a little bit differently about geopolitical issues and how they impact our sector. I was pretty vocal about the October 2023 event in Israel. I have two clients that are in the Israeli armed forces or have been in the forces before. So I was getting a lot of information I don't think the public was seeing in terms of what started all of this. And it was just brutal. And regardless of where you stand on the issue or what side you're taking, you can't really point out any period in recent memory where a president without congressional approval did what just happened here a week ago. I mean, this is unprecedented material. And then basically the following business day, because this happened on a weekend, one day on Monday, we got the news to trade on. And then the following day, literally, it was a ceasefire, which is being contested already. So what's your take on this in terms of, I guess, a bid on gold? To me, this kind of continues this pattern of gold catching a bid and raising the floor, if you will, on price.
Yeah, we definitely do look at it a little differently. I actually think that global tensions, as far as war goes, are somewhat irrelevant for gold. The reason why is I actually think the world's heading towards peace. It doesn't look that way, but I think by the end of the decade, it will appear that way. I think that war is going away. I've done a lot of research in that regard. But I don't think that geopolitical tensions regarding war is really that impactful for gold. What is impactful, I think, for gold is the economic geopolitics. And the economic geopolitics is the rest of the world is pulling away from the U.S. And that's where the de-dollarization goes, is where the global South goes. And Trump is actually pushing countries away at the wrong time with his tariff policies. So there's already this friction, if you will, between the U.S., which was the global hegemony. The U.S. is basically dominated, the only global superpower. And the rest of the world is kind of pushing back. And now you have the global South pushing back this de-dollarization. So for me, it's all about geopolitical economic issues. Though that's for me, that's 95% of what's pushing gold higher. And what I think is really pushing gold higher is Triffin's dilemma, where the dollar's too strong and the rest of the world doesn't like it because we're exporting inflation.
Right.
And they're like, we don't want these dollars anymore. We don't want these global reserves anymore. We're pulling away from the dollar. I'm completely against the Brent Johnson milkshake theory, where the dollar dominates and the dollar just keeps getting stronger and stronger. I think it's the opposite. I think the dollar is going to get weaker and weaker because globally countries are pulling away from the U.S. And I think the Ukraine war triggered this geopolitical economic shift, if you will. And now Trump is the trigger with these tariffs, it's going to speed up de-dollarization. And the key to it all really comes down to our bond market. So the U.S. is dependent. We've been dependent on basically exporting debt, living off of debt. We have $1 trillion in interest payments. We're literally dependent on our bond market. And if that bond market, and I think it already is starting to weaken, that bond market becomes fragile, then you get a doom loop. And so that's where I'm coming from. So the war, this Iran thing for me was, somewhat of a nothing burger. I mean, people died. I mean, that's really bad, of course. A lot of damage, a lot of destruction, but it's really, for me, it's all about economics.
Yeah, I think the U.S. did look, you never want to see this kind of thing happen, but, given the results, I think Trump sent a clear message to the Middle East that we're not messing around. And I don't think that the average person out there believed that this was on the table, which is why I was saying that, I think this just strengthened gold's ascent in that some people that were thinking about getting a hedge in their portfolios are now getting a hedge in their portfolios. I mean, this was pretty widespread news, and this is not done by any stretch. I mean, I've seen ceasefires in this part of the Middle East come and go within a matter of a couple of weeks or less. So, I mean, we'll see how long this persists. But I think that all of this, like you and I have been talking about, Don, for months, the fear trade has to kick in order for this rally to really, go with the three pillars, if you will, the gold price, the silver price, and HUI or GDX, depending on what you follow for the large cap producing miners. But this is the kind of stuff that helps. I mean, the price action today was really, really strong here on June 26th. You saw platinum up over 6%. Up over 4%. Palladium was up over 6%. Copper almost 3%. I mean, these metals are catching up to gold's ascent here, and there's various reasons for that. But, I personally believe that some larger institutions are putting on commodity positions here because, as you know, the average advisor out there is not going to buy a platinum ETF. They're going to buy DBC or something that would be a broad-based commodity product that will have a piece of gold, a piece of oil, a piece of platinum, and then just set it and forget it, right? And when you put more and more assets into a commodity sector, which is very thinly traded, you're going to get days like this. And at least from my client's perspective, it's been pretty exciting here to watch a lot of things move up that haven't moved in many, many months or even years.
One thing about, so you mentioned that the bombing in Iran actually created kind of more uncertainty, more reason to own gold. I would actually say that Wall Street saw that as a positive for the economy. Okay, now the Iran problem is gone, if you will. So now we don't have to worry about that. So let's be bullish on Wall Street. But bullish on Wall Street is bearish on gold, historically. Bullish on Wall Street means the economy is strong. If the economy is strong, that is the kryptonite for gold. The 1990s is a perfect example. 1980s and 1990s is a perfect example. Economy was strong in the 80s and the 90s. Gold did squat. Nobody cared about gold. I don't want to own it, right? And then 2012 to 2014, the economy's coming back, inflation, and gold just crashes, right? So they're supposed to go in opposite directions. Now, why is gold so strong with the stock market near an all-time high? It makes no sense, except when you look at it through the lens that gold is basically sniffing out the next recession, and it's sniffing out what happens to all this over-leveraged in the debt. What happens to the economy if that over-leverage pops? Now, if you look at the guys that have been around the longest, we look at Jeremy Grantham, who's in his 80s. He
Right.
calls this the most fragile market he's ever seen in his lifetime. And this is a guy who was short, who saw the Japanese market way before anybody else and said Japanese market is going to crash. He was right. He was right about 2007. I mean, about 1990, 99 and 2000. He was right about
Right.
2007 and 8.
Yeah, I remember that.
And he's saying this is the most fragile. So you got him. Then you got Warren Buffett, who's been around as long as Grantham. And Warren Buffett has $350 billion in cash and won't buy anything. Jim Rogers, who's another guy that's, I don't know if he's 80, but he's got to be close to it. Those three guys have been around a long time. And Jim Rogers said, I would be very careful here. This is a very unusual situation. You don't have markets that run for this long and keep running, right? And everybody's ignoring the fact that we are at the end of a cycle here. We're at the end, and everybody on Wall Street is all bulled up, but they're talking their book. They're talking their book. They never go bearish. As a matter of fact, Jenny Harrington is the only one that's somewhat bearish, but she's fully invested, and they still attacked her today on the halftime show. They attacked Jenny Harrington for having the temerity to say that she was nervous about where the economy was, where the stock market was going. She's fully invested. They still attacked her. It's unbelievable.
Well, yeah. Is she a portfolio manager of a mutual fund or ETF or?
Yeah, they all are. They call themselves the committee.
Oh, I see. I've stopped watching the CNBC talking heads many years ago. I just got depressed because it's like some of these guys. I actually had a client of mine who's very wealthy meet with some of the fast money guys recently. He went to a dinner with them and he said, you and Don Durrett know more about gold. Like, you've forgotten more about gold than these guys know about gold. And it was like pretty funny to hear from a guy who's worth like $100 million. But it's an environment that reminds me of 99 into 2000 or 2000 into 2001, like depending on how you believe where we are in the cycle. What I would say is very, very different from that correction to today's world is algorithmic buying and selling. People are not ready for the velocity that's coming when we do get a sell-off and how quickly things can happen. If you're not ready for it, just look at what happened in April with Liberation Day, right? You don't have to go back years to see what happened. Apple was down 23% in 5 business days following Trump's Liberation Day. I mean, this is reality. And that brings up the point, Don, that I brought up many times on our show, which is the difference between investment return and the investor return, right? Investment return is what you see on a Slick or on CNBC on, as of March 31st or June 30th or whatever. But investor return, when you're down 15, 20, 21, when are you selling Apple in a 5-day period? I would argue a lot of people sold and then had to rebuy at higher prices on the way up, right? Because they got scared. I mean, this is normal human behavior. I think you're just going to have to be a much more agile and you'll have to align yourself with people like you and I if you want to make money in this market, if you're buying gold and silver related stuff, right? Because things are moving so fast. I mean, silver breaking out above 35, we should probably touch on that and then introduce Kimberly. But silver breaking 35 here is major news, right? I mean, you and I have been talking about it breaking 30 last year. And now that we've done that, it can't get below 30. It got below 30, I think, one day in recent months. And that was after Liberation Day. Remember that, downturn of about 12 to 13% we saw in those 2 days following that announcement. But silver literally has come back over 30, now over 35. It's holding 35, which was major resistance for a long time.
Yeah, I think it's a bull trap. So 35 was an important breakout level. Absolutely. We got above 35. However, you still had 2 more additional overhead resistances you need to get through, 36 and 37. So we got through 36. We're above 36 today, 36.58. But we haven't gotten above 37. And a lot of times when you try to break out of these technical resistance areas, you fail. And then when you fail, you go back down. And so, and the way when silver runs, it runs. And so you usually, when you get above 35, you get follow through and you just whoosh, it just goes to 38 and you go through the 36 and 37, but it didn't. Now, yeah, we've been above 35 for 2 weeks, but I still think it's a bull trap in that people that are buying miners, they started buying above 35, 36, 37. And in many respects, normally you would think that would be the breakout and whoosh, we're off to the races, but a lot of the TA guys say that we are off to the races. But I think it's a bull trap in that I think we're going back down somewhere between 30 and 33. And if you get a correction, you're going to be down in the 33s in a heartbeat. So 33 is kind of a nothing burger correction, if you will. Yeah. So I don't think 33 is where we're going. I think we're going all the way down to 30 or 31. And that's a significant drop. I mean, you're talking over 10% in silver. And so I'm thinking, 5 to 10% in gold and, 10 to 20 in silver. And that'll be a significant correction. I think we're going to see that when the stock market finally rolls over.
Okay. Yeah, I mean, I would argue that people could buy some silver juniors here with, some limited downside risk. I mean, we've talked about Aftermath Silver on our program before, AAGFF in the States. I just talked to them again last week. I mean, they've got so many things going on that are positive, and the stock is at 49 cents. I mean, I think that stock could be a 70-cent stock pretty quickly once it breaks above 50, which has been major resistance, which we're tapping on right now. Another one is Triumph Gold. I just talked to them today. TIGCF in the States, TIG in Canada. I mean, John mothballed that project for almost 3 years. He literally said, no one's getting credit for their drill results right now, so I'm stopping marketing. I'm stopping news flow. I mean, when I looked at his website, when I met him about 6-7 months ago, I said, what happened to your news flow the last 2 years? He said, we haven't had anything meaningful. We just basically put the project on the side and waited for gold to break, something reasonable like 3,000, and now we're going to put the pedal to the metal. They just raised a couple $1 million. He's meeting with Eric Sprott soon. I can't say when, but basically there's people that are interested now in the story because they just picked up a silver project in Utah, which I've done the work on. It's amazing. He bought this for $150,000 at 1 million shares. I mean, show me another deal like that, like this year. I haven't seen anything.
They're cheap stocks like that are a dime a dozen. It's unbelievable. I have two ones, but I'm going to save it for after Kimberly. We'll talk about those at the end. So you guys stick around for those two. Let's bring her on.
Great. So with that, we'll introduce Kimberly Ann, who is the CEO of Lahontan Gold. And she is in the U.S., which personally, I've been overweighting U.S. stocks. And we were just talking off camera about that. And welcome to the show, Kimberly.
Thanks. I'm excited to be here.
So, Kimberly, why don't you give us a 10 to 12 minute overview of Lahontan, and then Don and I will ask some questions.
Okay, great. So Lahontan Gold is projects in the Walker Lane, Nevada. I like like a lot of CEOs say, the markets have been strange the last few years, and taking the time to kind of get all your ducks in a row as a business is a really important thing to do. And that's actually what we did a few years back in that Santa Fe, our flagship asset, is a past producer. It was in mining 88 to 94, open pit, heap leach, low cost operation. We still have all the infrastructure there in that we have wells on the property with all the water rights. We have a substation, beautiful road access, etc. So yeah, we have everything there to bring it back into production in a short timeline. And a couple of years ago, we made the decision that you're not going to get the bang for the buck on a drill hole. So let's focus on spending our dollars permitting it. So then I could be sitting here with you with a now pro mining administration that is helping us fast track this back into production. So I will say I didn't think Trump would be coming back into office, but with him back in office, he's really helping us, especially in Nevada. We're really seeing a lot of shifts there from that. But then we also have 3 other assets. West Santa Fe is considered a satellite operation to be. It's 13 kilometers away. It's a lookalike, all oxide, starts at the surface. It's got 171 drill holes, about 13,000 meters of drilling. We got that project for a very low cost, 1.8 million over 7-year option agreement, back end loaded, 19 square foot land package. So big land package, lots of room for flat ground to be putting in heap leach pads, etc. And then we would load the carbon, ship it across the road to Santa Fe proper. So that's why we picked this up, because it was low cost oxide in the ground to add to what we have currently. Our resource right now is just under 2 million ounces. The grade is 0.93 gold EQ. Just the gold is 0.64. So I like seeing silver and gold going up, obviously together. That is going to make for even a stronger project for us. But right now, the focus is we're going to be in the NEPA phase quite soon with our plan of operation, which we should be announcing in the next couple of weeks, I hope. And then, the goal is to break ground in early 2027. But that being said, we're still drilling. We just finished a drill program. Just under 2,000 meters. It was a small drill program because we're basically bringing our pit shells down, doing more metallurgical work for recoveries, etc., and just testing out some other areas. We'll get that information back, and then we'll go back to the drill rig in October for that. So lots going on the ground. It's a really exciting time to be a part of the story. I think Don will tell you what he loves about it is that there's a clear path to production. It's in a great jurisdiction. I mean, it checks a lot of boxes. I mean, I know, just like you guys, we're all in this business to make money. And I wanted a business plan that we can drill this project out through our own cash flow, because it's a massive project with massive upside. But darn it, when you're looking at drilling a hole to give it away or sell it to a big dog, I didn't want to do that. I wanted to get to the point where, okay, we can justify an 8-year mine life right now, 60,000 ounces a year, blah, blah, blah. I mean, the numbers look amazing, but that model was done at 1950 gold back in May. So just by redoing our models right now, bringing our pit shells down, capturing all the gold and silver at reasonable gold prices, it's just a massive project. So really looking forward to getting through the end of the year, getting our numbers back, and putting them out there for the world to see, because they look fantastic internally, of course.
So I noticed on your website you're updating the PEA in Q4. Do you have more of a specific time frame, like October, November, December?
Yeah, so I actually think we won't put out that document till Q1 of next year, because the drill program we're doing in October is going to be pretty extensive. We usually drill RC because it's very inexpensive. Plus, we're still getting the same recoveries as we do for core. But that being said, we are doing some core as well, because of just our mining permit is requiring some, column leach tests and a whole bunch of stuff that we need to do. So that program is going to be a little more complicated and time consuming. And I believe what we'll end up doing is putting out a resource update in January and then following it up with the PFS. The PFS we do have, it's a 300-page document. We put it out there earlier than I probably would normally do it, because we're so deep in the weeds of permitting that we need to know how much dirt we're kicking up. And, we need very important details that we had to have a published document out so we could continue with our mine permit and not delay that process. So great. And the numbers look great right now, but we know where we need to go to make them better on all fronts. And that's what we're doing.
Sure. Okay. What roughly are the drilling costs at Santa Fe?
So I budgeted $100 all in a meter. We work with Bort. I've worked with Bort my entire career all over the world. They're fantastic. They give me the best crew. I have a great relationship with them. Last round before this, they came in at $84 all in, which I was very happy about, but I put in $100 for budget. And I think they've come in even lower this time, because our rock is super competent rock. So they drill really fast. A lot of things about our operation that's really special is the CapEx right now is $120 million. That's with a 20% contingency. It's still not that much money to go out and find if it does come in 120, but that's because We don't need to have engineers drill core holes to see what the pit slopes are going to be, et cetera, because we have 4 pits on the property that have been sitting there for 35 years in perfect condition. So at 50-degree pit wall. So a lot of questions that you have spent a lot of money and time to answer. We just don't have to do that because we have it all in front of us.
And you mentioned the CapEx at 120 roughly. Would that be funded by a combination of debt and equity?
It depends where our share price is at the time in the markets, of course. I really like debt personally because it's non-dilutive to our shareholders. I used to work for Waterton, just to give you a little bit of background on me. And I worked on the debt side, so I understand how debt works. Right now, I've been doing a lot of first dates, as I've been calling them, with different groups that I'd want to work with. But I'm really excited that Trump put gold on the critical metals list. I think it's about time because I do think it's as critical as everything else we have, which opens up doors to some of my favorite people that I want to work with on the debt side that have already been talking to me pretty seriously about it because I'm sitting there going, do you need a bankable study? Do you need a PFS to say yes to this? And because they all run their own models anyway, that's what we used to do. Right. And the answer is on some is absolutely yes. And on others, it's no, Kimberly, like you have evidence of 6 years of mine life and we're going to do our own models anyway. So I'm really preparing for the future of debt and maybe a little bit of equity. But we're also royalty light. So we have optionality there as well. And we have one little royalty of 1.25% on 24 of our patent claims. It was written so long ago. I still have yet to find the people, 2 prospectors. It's on typed paper, and they don't get anything till we've produced 250,000 ounces on those 24 claims. So I'd be happy to write that check all day long, right? So, but it does just give us optionality from the financing side. And for me, I really would like to have as non-dilutive as possible. I'm a big shareholder, and I'm very sensitive to dilution. I mean, we will take the dilution as necessary to get to the finish line. But certainly when we're raising $100 million, we shouldn't have to take much equity, right?
And can you talk a little bit about the other 3 projects in terms of what kind of upside do you see there? A lot of times we interview people, I've looked at your chart and it seems like it's got a lot of room to run up from here. And sometimes like if, Rachel Bowman at Paramount, who's a friend of mine, she's got, Sleeper, right? And she always talks about Grassy. And I'm like, well, what about a couple million ounces over here? Like, I think the market isn't valuing that properly. So is there something in your mix like that? Yeah.
So actually, I mean, this company, for your viewers to understand, we formed this company in 2020. I'm a serial entrepreneur. I managed to find fantastic assets with my teams and sell them off for great prices before I get to even play with them as much as I'd like to. And that's how this company was formed. Basically, all the board and management were investors on a private level from Victoria. And when I sold the company, they were very happy shareholders. And they said, Kimberly, would you take on Santa Fe? I know you have other assets in the Waukesha, Nevada that you could put with this. And I was actually going to start my next company as Moho, our high grade gold and silver asset, as the flagship asset. So that asset is fantastic. It's, we've drilled a very small amount there, 1,800 meters of drilling. But you can walk underground 2,000 meters. It's 25 grams gold, up to 600 silver. I mean, it's just a crazy system that we picked up in my private company back in 2017 that had never had a drill hole. It was owned by this cute, lovely couple that I was fortunate enough to pick this up from. So that has massive legs, right? We haven't been able to focus on it because this industry has been so depressed for the junior space for so long that you just can't do it all at the same time. So in October when we drill, we will be drilling over at West Santa Fe because it's the same style rock, very low cost. We can use our C rig. We haven't put out a main resource on that property yet. We want to get that out to the public because I know a lot of companies kind of go stagnant when you're in the permitting phase. Well, we can still drill everywhere. We can still drill at Santa Fe. We can still drill at West Santa Fe. So West Santa Fe will come online at the end of this year for people to really see what the heck's going on there because it's a really exciting project. And look, you don't need to find 2 million ounces there. You don't even need to find 1 million ounces there for it to be a measurably important project for the company, because even if we're bolting on 30 to 50,000 ounces a year by trucking across the road to Santa Fe, that's fantastic, right? So we know what our internal resource is right now without drilling a hole. We've already had a third party look at the data so that we know what data we can and can't use and where we need a twin, et cetera, et cetera. So that will be coming out. And then if the markets really get to where we all want them to be, I will certainly raise enough money next year, probably in Q1, to start going after Moho, because it's just phenomenal. Red Lick is a silver project. As much as I love silver, I would like a partner on that asset. It's right next door to the Candelaria open pit that was mined for 30 years. Silver One owns it right now. We have a fantastic disseminated system there of silver. But again, we just don't have enough money to go around. So I am actively looking for someone to want to partner with me on that. I mean, we only pay the BLM fees on the property, so it's low cost for us to hold now. But it's a great asset. It's just, it needs to be in someone else's hands that can take care of it, do the right thing with it. So yeah, I mean, that's what I love about our company is we have legs everywhere you look, with great assets, with no debt on our books, things like that. So yeah, it's good.
Thanks for explaining that. Hey, Don, why don't you take it from here?
Will do. Hi, Kimberly.
Hi, Don.
So I met Kimberly in Vancouver at the Metals Investors Forum. And so I invited her and she came. And so I know this story well. So I'll give you guys a heads up on it. So it trades in Canada under the symbol LG, which is kind of easy to remember. And then in the US, LGCXF, and it trades QB. They have 285 million shares outstanding and 385 fully diluted. But fully diluted, the market cap is only $26 million. And this is going to be over 2 million ounce open pit company, which is, it's kind of ridiculously valued. They have strong insiders. No one's going to steal it from Kimberly. Everything looks, it's just kind of silly cheap. Like she said, it has a path to production. I think it'll be construction ready in 26. So we don't have to wait that long. It's only a 1-year build. And it's a brownfield project with past production. There really isn't any red flags here. It checks all the boxes. Let's see, where's my questions? First question is your metallurgy. So she is 50% oxide. So what do you have estimates on your metallurgy for oxides and sulfides?
We do. We don't really report them so much to the public because when Kappas Cassidy did, the PA, they would not report what reality was for 6 years of mine life, which is one of the things that, as a CEO, that I'm paying for these people, it frustrates the heck out of me that we have not only evidence of what's happened there, but they won't report it properly. So what we're doing now is we've got a laundry list of things that they want to see, column leach test, more ball rolls, et cetera, that we are doing to make them happy. Because over at Slab Calvada area, we were getting 62% recoveries for the oxide and about 41% for the transition. There wasn't that much transition because we're still drilling out the whole Slab Calvada area, and we're down 350 meters, and we're just starting to hit the transition. So I don't think they really have a lot of good data over there for that because there just wasn't much they were mining over there. Over at Santa Fe, which is the largest pit on the property, it's only 90 meters deep, but they were hitting some sulfides in that area, and they were getting 50% recoveries and 80 to 86 for oxide. So what we're doing now is going back and doing like studies to make them happy, because they were reporting about the average of 12% less than what we know from mining. And we're also working with another group, which we announced a press release just the other day, yesterday, I think it was, about working with a partner of studying the metallurgy. There's lots of different companies right now that are basically taking sulfides doing a process on them and turning them into oxide and then being able to heap leach them. So we've sent our rock off to different groups to test that, because if we can successfully make that happen with our sulfides, then it opens up. I mean, we have an inventory of over 1 million ounces internally of sulfides, but very high grade stuff. And that would bring, that would open up the door massively. So we are taking the time to do those studies. They take about 180 days of, processing the rock to see if it works in these different opportunities, but it's worth it, because most of these groups, as you guys probably know, are doing it for free because they want to see scalability out of this. I mean, it could be revolutionary for the industry. I think it will be happening. I think they'll figure it out in the near future. Also, what I like about doing this is Kappes Cassie in particular, one of the guys that's worked our file there, he's worked with these groups before. And I said, if you get the endorsement for this group that says we can process our transition at Santa Fe and get 80% recoveries or whatever the numbers are you going to, put that out to the public and the PA? And he said, absolutely. I used to work there. I believe in this technology. So to me, that's really important. It's no risk for us to, try to improve it as much as possible, because, every percent of recovery counts, right?
Sure.
Right. So you're going to start mining oxides. How many years do you think you'll be mining oxides?
Well, our document that you have seen, our PEA, shows 8 years of mine life. But that was oxides? Yeah, of oxides. And 6 years of oxides, and then the remaining is the transitional side of things. But that being said, that's at 1950 pit shells. So we've dropped down the pit shells. I can't tell you online here what that looks like, but we're adding hundreds of thousands of ounces because we're just dropping it down because we know we're not going to be mining in 1950 gold, right? So we have to capture all that, put it in a new model, send it off to the BLM for our permitting so that they know how much rock we're moving.
Right.
So
what I'm trying to convey to the people that are watching is that your recovery rate for the first 6 years, we can be very confident it's going to be at least 80%. So you don't have a recovery rate when you start mining here. So, and it could be 85, 90%. So the recovery is not an issue. Okay. So the next question I have is, how much money do you need to get construction ready? So the next 2 years, how much money are you going to need, and how much money do you have?
That's a really good question. Permitting alone, as we all know, is extremely expensive, and they come up with all kinds of new fun things to have us do that come up surprising. But we have a budget of 1.8 million US, I'm talking US dollars, for now till getting our permit to mine it. And that is, we have 2 permits going, if you remember, Don, a plan of operation to allow us to drill project wide, and the mine permit in the exact same footprint. So we're using all the same studies, and we're fast tracking it through the EA process versus the EIS, staying in the same 640 acre footprint. So both of those studies together and all the permitting, we have budgeted $1.8 million. And that comes from my 7 lovely consultants that work very hard for us on that. That is the high end of the spectrum. But I plan for that because you never know, right? So from just nuts and bolts on the ground, 1.8 million for permitting, processing, studies, et cetera. And then we'll need to do this next round of drilling, which will be about 5,000 meters. I'm guessing this is why we need to get the assays back to really see what the numbers look like. But that drill program will be more expensive because we'll have to do some core, about 1,000 meters of core, and that's about $220 all in. So, that program's going to cost us $2 to $3 million. It just depends on what we need to do at that time. And that will be a discussion with our third party consultants to tell us exactly what they want to see, because the next document we put out, our PEA study next year, whether it's a PEA or PFS level, I want it to have everything that we need, so that people really can get a full picture of what's happening. So I guess what I'm saying, besides all G&A between now and production, we probably need 8 to 10 million total. And that's I'm telling you a very high number. We could probably do it for less, but I want to just give you a conservative number. And honestly, that's not a lot from now till production, right? It's not that much money. And we're not going to raise it all at once. We've talked about, if you look at our stock price, we had that whole issue with Victoria's large ownership and getting stuck in the purgatory of the PwC receivership. But since then, the stock is moving. We've got great shareholders that are holding the stock and smart insiders that see, what the end game is. So when we do the next raise, it will be focused on, well, how much can we raise without, minimal dilution, et cetera, et cetera. Right now, we have about 900,000 in the bank, US. So we're looking pretty good right now. We are under budget. But you remember, we only raised 2.15 Canadian back in April, and we could have taken more, but we didn't because of dilution. And when you convert that to US lovely dollars, it doesn't go very far. So we've been very careful with our budget to make sure we're getting everything we need done, from the permitting and the actual drilling we need to make that next jump on the next round of drilling, right?
Yeah, absolutely. So you need about 9 more million, 8 to 9 more million over the next 2 years. That's a lot of money. So
yes and no.
So 10% of your company, I mean, you're at 26, is only 20% is 5 million. It's like 40% of your current cap. So, but I do see this company really being very successful, and I think you're $1 billion company. So let's look at the current size. So you're 1.9 million ounces at 0.9. By the way, she said that gold is only 0.6, but the other is silver, and silver is actually worth more than gold, because silver is going to outperform gold 2 to 1. So yeah, it's actually a little better than I think than 0.9, because silver, she's using gold equivalent. So, yes. So it's actually a little better. And that's for oxides, that's actually high grade. That's high grade in Nevada. And she mentioned that the pit shell is going to get bigger. So this is actually bigger than 1.9. I think conservatively it's 2.5. They've had 13,000 meters drilled at Santa Fe West. That's about 100 holes. So there's
171.
Okay, so that's a lot of holes they've drilled that she has. So we're looking at another 300, 500,000 ounces Santa Fe West. So, this is more than 2 million ounces project, and it's valued at 26 million. Okay, so you have 100 million options and warrants. When will those be in the money, and how much money are you going to get from that?
Well, I can't tell the exact numbers of how much we're going to get from that, because I would actually need to look at the list of them. But there's 8 cents. There's 2 different 8-cent ones that are in the money, and they're held by large shareholders. That it doesn't matter if they're 3-year warrants or not. They will exercise them if I call them up to do that, and I am doing that now because that's built-in money. The last raise we did, those were also at 8 cents. They have an acceleration clause at 12 cents, so they could be triggered quite soon. And we traded a high of 10.5 yesterday with really good volume. So we're heading down that path of cleaning up a lot of those. The actual amount we'll be getting from this last round, I think it's about, it's about $1.5 million. I literally don't. I'd have to look it all up, but I mean, it's a measurable thing to care about. And when I'm talking about 8 to 10 million from now till production, I don't look at that as a lot of money, because I know we're going to be successful on the ground and with the share price. And that's considering drilling at West Santa Fe and talking about these projects and running the company properly. If you want to break down to just me sitting here, my hands waiting for my permits to get Santa Fe in production, then it's probably about 5 million, right? So, but I believe in running this company properly to get us there as quick as possible with this massive upside from especially the West Santa Fe playing into that, right?
Right. So You have a couple options here. You mentioned the NSR is very light. You have only one. It's one and a quarter, which is low, and it doesn't even kick in until 250,000 ounces, which is year four. So you basically don't have any. So
but no, not year four. It's only on those 24 claims.
Okay, so all right, so you might not even be mining those.
Right. I mean, well, we will be mining them, but the point is, like, 250,000 ounces out of those 24 claims. Like, I'd write the check all day long with a big smile on my face. So that would be a lot of ounces out of that one small area.
All right, that's good. So you definitely can sell that NSR, which would be very, very beneficial to shareholders because, I mean, you need 8 to 9 million more dollars. So yeah, I mean, raising a couple million through the NSR would be. I would like to see that. I have no problem, with a 2% NSR. Okay, so the other one that I had, for you to raise money. I'd like to see you sell. Have you thought about selling Redlich? I mean,
that's what I was saying earlier. I want to sell Redlich because it's a silver play. I love the asset, but it's just one more thing. So, I'm shopping it.
I would think silver one. I mean, you don't need a lot of money for it. You just need a little chunk of money, because that's all you need.
I don't know what they're doing over there. I've talked to the CEO. Where did I talk to them? At PDAC, and they didn't seem interested. I'm not sure what they're doing next door. But yeah, I mean, we're obviously the perfect fit. It's the extension of what they're drilling.
Yeah, well, okay. If they're not interested, silver projects are rare, and in silver, according to me and John, silver's going a lot higher. So silver projects are going to be very exciting. Anybody that has a silver project, everybody's going to want to get their hands on them. I mean, my target for silver is 125 to 150. Yeah. So Redlich could easily be a 30 million ounce property. So
I mean, do you be patient? I mean, you got to look for the right fit for it. And I've put feelers out there, but timing's everything for that. And it doesn't cost us much to hold it. It's just our fees. So, I mean, it's, I'm looking for the right person, but who is it?
Yeah, silver. Yeah, another one you might reach out to Silver Mines out of Australia. They just picked up a property in California. I would think your property is probably better than the one they picked up in California. So
I live in California. I don't want mining in California.
I know. What are they doing? What are they doing picking up a property? They're in Australia. They're picking up a property in California. Yours is probably better.
I mean, permitting is scary in California.
The one thing I want to end it here. The one thing that I was impressed with Kimberly, she said she's a serial entrepreneur. She actually started her own business when she was 18 years old, and then she sold it. I mean, it's pretty amazing. And then after that, she's just been starting businesses ever since, and she's been successful her whole life. So your first business, how much did you sell it for?
I sold for $3.5 million to my best friend. It was 2 hair salons. I had 40 employees at the time, and I was competing in ski racing, so I just didn't have time to own anymore. But I built like a really great brand, and it was crazy fun business. But I just wanted to do something else. I get bored easily.
The important thing here is she was 18. I mean, I can't even imagine when I was 18 to start up my own business.
I grew up very strangely. I had parents, Don, that would tell me if I worked for someone else, I was a failure. That's what my dad used to tell me. You don't work for anyone else. We start businesses.
Most people start their businesses in their 20s, not when they're 18. But the thing is that, so she starts her first business when she's 18. I mean, who does that? And then she's successful, and then she just keeps going. Okay, what's next? What's next? What's next? So here's the kicker. So she got into mining. And this is her first mine that she wants to build. So she's got her claws in. She's like, I'm building this one. So I think it's pretty cool. So here we got this serial entrepreneur this is her business that she wants it to work. And every business that she's done has been successful. And I'm like, where do I buy shares, kind of thing. So, but I bought this at the bottom. Victoria Gold owned 30% of her company, and they had to sell all of their shares because they went bankrupt. And that put downward pressure on her stock, and it just kept going down and down and down and down. It got all the way down to 2 cents, and I'm looking, I'm going, okay. I'm kind of I like to buy to the bottom. It got to 2 cents, and I looked at it, I go, 2 million. Here was the market. The market cap was $6 million, 6 or 7. And it was a two. I'm going, there's no way it can get any cheaper. So I bought it at 2 cents. Today it's trading at 7.3. It's still cheap, 7.3. And yeah, I think it's a $1 billion company. It's currently valued at 26 million. But it's going to have dilution. Now that's going to be the key. And she doesn't want to dilute shares. She's stubborn. She's like, I'm not just, I want to make money here. And she knows if she dilutes herself too. So
yeah, I buy every round, but it's important to balance the two. I'd love to say I'm just going to go raise 5 million tomorrow. I had a client in New York when I was there a couple of weeks ago. He's like, Kim, I'll just give you a drawdown of 20 million. I'm like, thank you very much, but I don't need that right now. And
I'll end it here. Here's the thing that's beautiful about Kimber. So when she's an entrepreneur, she goes from business to business to business. When she sells this company for $1 billion, she's going to be like me. She's going to walk away from mining. No, that was fun. Now what's next?
Now what? Well, I don't know. I am obsessed with mining. Don and I had dinner, and the reason why I got into this business was because my friend, who was a ski coach, who was a geologist, told me, "Oh, you should buy stock in my company." And I'm like, "I thought you were a ski coach. Like, who are you? What do you do?" And he tells me, and I put in money at 18 cents. And Canadian, and it went to over $5 in 4 months. I built half my house on it, and turned and went, wait a minute. Okay, I just gave my factory, because I have clothing companies with my husband, $100,000 for samples, and I just made X in 4 months. I need to understand this industry. Like, that was just way too fun. Of course, that doesn't happen very often, as we all know, but it hooked me in.
Yes.
There's always a story that hooks us in, and
I'm glad
I think we're all going to be rewarded as the next year to 2 years unfold here.
Yeah, it's going to be exciting. I'm really excited about this. Is one of my favorite companies I've ever had, and it's just, I feel very confident what we're going to accomplish, with a lot of integrity involved, which I think is really important to run your company responsibly and make sure that when it does sell, I put it into someone else's hands, and I can be proud of what we've done and what they've inherited from us. So that's
I
haven't told people my target price for this company.
Oh yeah, what is it, Don?
Right. So as an 80, so their market cap today is 26 million. As an 80,000 ounce producer, and they have 1.9 million, so I think they can get to 80. They're going to start about 50. I think they'll get to 60. I think they'll get to 80. As an 80,000 ounce producer, they're a 20 plus bagger. Now, if they get to 3.5 million ounces of gold and they get to 125,000, it goes up at least 50%. So we're looking at a potential 30 plus bagger here.
Wow.
Yep. I agree with you on that. And I think it's going to happen this year, to be honest. Or not this year, within 12 months.
Nice.
Well,
thanks for being on.
Thanks for having me, you guys.
I'll see you at Beaver Creek. We'll both see you at Beaver Creek.
Yeah. Great.
Don and I will both be speaking on September 9th at Beaver Creek together. So. All
right. Well, I already have a meeting. I think Don and Larry was one of my first booked meetings. I'm like, that is like in September. That's so long from now. They've opened up the meeting room already. So it's great. I love that.
It's great about these meetings when we'll have with you. It's like, we don't have any questions. What do you want to talk about?
I know. We've done this before. I know. Well, that's what I was saying. Maybe you should just come over for dinner at my condo, have some fun.
Great.
Well, thanks, you guys. Look, I really appreciate your time today, and I hope your people that get to see this enjoyed it as well.
Right.
Very good. Well, thanks, Kimberly. We sincerely appreciate it. And Don and I will see you in September at Beaver, and we'll be following your story along the way.
Thank you. Take care, guys.
You
Bye-bye.
too.
Bye.
So Don, thanks a lot for the introduction there.
It's a great story, isn't it?
Excellent story.
Yeah.
I love, and asking her about that other asset, and that, she's a little different than Paramount, and that she said, maybe we'll raise some money in Q1 and drill that too. I mean, that's interesting because a lot of times the second or third project in these companies gets completely forgotten.
Yeah, this is 2.5 million all day long. So the shell in Santa Fe, they already know it's expanding. So they're at 1.9. So they know it's bigger. And then Santa Fe West, they know that has oxides at surface. And the way that Nevada works, you can mine Nevada oxides at 0.2 easy. And so very low grade is economic in Nevada. And so 0.2, 0.25 cutoffs. So we know there's gold at Santa Fe West. So this is a 2.5 million open pit all day long.
Huh. My only concern would be the share count and how that looks through the process of growing, right? Because at 285 million shares, it's a little bit high. But do you know how that's broken down? I'm not putting you on the spot. I know you've done some research.
Yeah, they're at 385 million shares fully diluted, and I think all those
385 or 285.
It's 285 common. So the 385 fully diluted, that's probably all going to turn into money. I think it only goes up to 12 cents, and they're already at 10 Canadian. So that money's all going to happen. I believe within a few months that'll all be in the money. I don't think it goes much higher than 12 or 14 cents Canadian for the warrants. So 385, and they're going to probably dilute by a third. So, but maybe a little more than that. So maybe, they get to 550 fully diluted is a possibility here. I don't think it'll go much higher than that. Maybe we'll get lucky and it won't go that high, but, they might do a reverse split at some point, but I'm not worried about dilution because it's so darn cheap. Like I said, I think it's $1 billion company and they're currently at 26. So even if you dilute 50%, 40%, you still have a 20 plus bagger.
Yeah. And one of the things that I think we should point out again, we talk about this frequently on our show, is, with Trump's actions in March and April of 2025 here, his executive order and the follow through we've seen at U.S. projects particularly, this bodes very well for any company like Lahontan. Like Nevada is like the #1 jurisdiction globally. It's not, top 10.
One thing that's beautiful about this project, it's a brownfield project. This is a past producing mine in the 1990s. It has water wells on it. It has a substation, which is a power station for electricity coming in. So they have the power and the water just sitting there. So permitting in Nevada, especially in a brownfield, couldn't have asked for a better situation.
Really. Excellent. Well done. I know you wanted to mention two other names that you teased us with earlier. So why don't we mention that and wrap it up? Because I've got a little bit of a short leash today.
Yeah, so since our last meeting, I came across two new names. I'll mention them. I mentioned them. I did over the weekend. I did 10 bagger developers and 10 bagger producers, and I had one in each of those. So the 10 bagger developer is Norsemont Mining, NOM in Canada, and it's almost very similar to Lahontan. But it has much more. It's in Chile. It has much more. It's a brownfield project, past producer with a mill. About 65 million capex to restart it. It's about 2 years out, just like Lahontan. But it's more exciting. I don't know how it can be more exciting than Lahontan. Lahontan's printing like a 20 or 30 bagger. But it's more exciting because it's a bigger property with a lot of exploration potential. So it's currently about 2 million, basically the same size as Lahontan. But it's going to grow. Like Lahontan, 2.5 to 3.5 million ounce is about as big as you're going to get. This one has the potential to be a lot bigger than that. This one has the potential to be 4, 5, 6. I think 6 is kind of upside, but 4 or 5 million potential mine. So it has the free cash flow is a little higher, but the potential free cash flow is higher, but it has a bigger market cap. I think it's jumped on Monday it was up 25%. I did that, my 10 bagger developers, and Monday was up 25%. So if you look at the stock, I mean, it's really ripped. And the reason why it's ripped is because, Lahontan should rip too. I mean, Lahontan is just as good, but this project has a little bit more. People always like potential. People love potential, right? So when they see this, it's got potential to be 3, 4, 5 million ounces, they get really excited. So this thing's jumped in value. I think the market cap's up to like 46 million versus Lahontan's at 26. But it's another one that checks all the boxes. It's just a one. I mean, they have plenty of insiders. As a matter of fact, the CEO and his family own 28%. So strong insider holdings, which is a big checkbox of mine. A plan to production like Lahontan, it checks all the boxes. All they have to do, they got to get it permitted 2 years and then get it built. But it has half the capex of Lahontan. Lahontan is about 120, 130. This one has a capex of 65 million because they already have a mill. So you have a low capex, 2 years, get it in production. It's nice. Okay, so that's Norsemont. The other one is the producer, which is Mineros SA. So the Mineros SA is a Latin company. It's a producer, 210,000 ounce producer in Colombia and Nicaragua. And I've never liked the company because it was Latin based, Latin owned. And a lot of these Latin companies, you don't get the warm and fuzzies when you look at their company presentation. They don't really, they don't really tell you exactly what they're doing, what they plan to do. They tend to be very slow moving. You know how Mexico and kind of a slow moving economy. So I never, bought Mineros, never really liked it that much because it was, kind of a sluggish company. But they got really cheap. So they're producing they're 200,000 ounce producer, right? And they have these 2 projects in these districts. They have a bunch of gold, but they've never aggressively drilled them. They're like, slowly slog around, take our time, we'll make money. Nobody liked them. So today they have free cash flow multiple. It was under 2, now it's a little over 2. And so this company, Sun Valley Ventures, they saw how cheap it was, and they're looking for opportunities. They invest in mining companies, so they're just private equity. No, they're not private. I think they might be publicly traded, but I think they have like 3,000 employees, so it's a pretty big company. But they acquired 57% of the shares, and now they're going to bump that to 65%. And they put 3 board members on it. They replaced the CEO and the CFO. So it's basically been a complete redo of the company, but now it's owned by Western management. And now Western management is basically looking at these 2 projects, and they think they can organically grow production from, it's currently at 210 to 350 just based on their existing properties. So I'm valuing them at 300,000 ounces. But the thing that's nice about it is they're not for sale. These guys just came in and they're going to put in 65%. So they're hanging on to it. I've talked to one of the founders at Sun Valley, and he said that this is just an investment for us long term. We're not going to flip this thing. We're going to build this into a 500,000 ounce producer. Now, it's not going to be a 500,000 ounce producer overnight. That's a long-term strategy, and that will only happen through an acquisition or 2. But they will grow this production organically to 300 to 350. That will happen. And so if you're a long-term investor, so all 3 of these investments, Lahontan, Norsemont, and Mineros SA, are 2 to 3 year investments. But 3 years from now, all 3 of these stocks should do phenomenally well if they get into production and they grow production to what we expect them. So if they grow production from 200 to 300, it's basically a 20 bagger. So all of these stocks are basically 20 baggers, pretty darn solid risk rewards if gold goes to 5,000, which is, that's my bet, right? Gold goes to 5,000 and they hit their production numbers, and then inflation doesn't nail our cost problems. But if all of our assumptions happen, these are the kind of stocks that I really like.
Excellent. Yeah, those are new names for our show. So I'm sure the listeners
We can
today appreciate that.
Yeah, we can have both of those guys on our show, and they can explain
Yeah.
explain the story, and it should be just like Lahontan.
Yeah, I'm already in touch with Norsemont, so be sure to give me the new Mineros teams info when you can.
The one thing that's amazing about these stories is normally you don't find 20 baggers. 20 baggers are usually rare. You usually can find 5 and 10 baggers. I can usually find those, right? But it's hard to find 10 baggers, 20 baggers that look really solid.
Right.
Those are, kind of unicorns. Those are hard to find. I always say it's almost impossible to find them. But I also say you can't pick winners. You can only pick potential winners. So we pick,
Right.
You own all 3 of these. One of them is probably going to do phenomenally well. One will do almost what we want, and one of them will, underperform. That's how it works. We don't know which one is going to be the big, uber success. We don't know.
Well, I will say, for those that have been loyal listeners, without patting ourselves on the back, because we rarely do that in the last couple of years, we've put some really, nice numbers together in terms of entry points this year. One that we got wrong so far. Well, let's take a victory lap first. We talked about West Red Lake at 49 cents when we interviewed Gwen Preston. That's much higher now and much higher volume. We interviewed James Anderson last year at Guanajuato. I think at 10, 11 cents. It's trading around 20, 19 cents now. We've had a very good track record when you look at who we've interviewed along the way. One that we got wrong so far is Denarius Metals, which is DNRSF in the States and DMET in Canada. But when you look at why we got it wrong, they did a financing, right? So when you do a financing that's going to be dilutive to current shareholders, the price is going to go down. It's rare that doesn't happen, even in a hot gold market. So I talked to Serafino, the guy we interviewed just yesterday, and I said, this seems like ridiculously cheap. What's going on? And he said, we have one large seller out there, and after that, we should be clear. So, for those that are listening, we just bought more yesterday based on that call because, as you know, Don, that's something that you and I have in common. We pick up the phone, we dial the CEO or the chairman and say, what's going on with this? Because if you look at the chart, it'll show you why I called, right? It's done this. And there's nothing wrong. They're in production in Colombia. Since you mentioned Mineros in Colombia, I learned a lot about this jurisdiction from Serafino. He's been in that area with Aris for 20 years. And there's a lot of upside there. Zancudo is going to produce more than people think. And they've got a lot of exciting things happening since we interviewed them. They got everything they said they were going to get in Spain, right, which is their second project. So when you look at this thing trading with an RSI of like 38, 39, with gold at 3,300, you're like, this is just a gift.
Right. The project that Daenerys picked up in Portugal, the Ascendant project, it's a good.
That's Cerrado.
Oh, that's Cerrado. Okay.
Yeah.
He picked up the one in Spain.
Correct.
I got them mixed up. But the project that they have in Spain is a good project.
It is.
And you're pretty much getting that project for free because Zancudo, they just started. He talked about how far they're into this ore body. He said, we're only 300 meters in, and it goes and goes and goes. And so, like I said, I do. I think Zancudo is going to be successful. And they're generating free cash flow right now. So the people that were, it's off like 50%. I think the people that sold are made a mistake there.
We interviewed him around 40, 41 cents, I think, and the stock's at 31 now. So it's a tremendous buying opportunity. If you look at Serafino's disclosures, he owns, I think, 21, 22% of all of the shares as the chairman. That's confidence, right? Like, you want to align yourself with people that are serially successful in mining that have that large of a position, in my opinion. So we'll leave it there. Don, as always, thanks so much. You and I will be getting together again in July a couple times and talking more macro and interviewing a few more people.
All right, John, I look forward to it.
Me too. Thanks for everyone time and attention today listening to our show. This is John Feneck with the Feneck Commodities Report and Don Durrett with GoldStockData.com.